taxable supply is transaction value. Yes, the transaction value is called taxable supply. If recipient is paying any expenditure relating to the supply on behalf of the supplier, then that amount also should be included. If the value of supply is not determinable as per above points, then the value of supply of goods or services will be calculated as per rule 30 or 31. Hello everyone, I am Arun Kumar, lecturer in Department of Commerce and Management, Vidhyaashram First Grade College, the Temple of Excellence, MYSURU. Dear students, today I will be discussing about value of supply, that is unit number 1, which comes under indirect taxes 2. So moving on to the content, today we will be discussing about value of taxable supply as per section 15, inclusion in the value of supply, exclusion in the value of supply, rule number 27, rule number 28, rule number 29, rule number 30 and rule number 31. So here we will be going to discuss about the meaning and what and all the items we are supposed to include and what are all the items we are supposed to exclude from value of supply and what are all the conditions we have under different rules, that is 27, 28, 29, 30 and rule number 31. So if we look into the meaning of value of taxable supply. So value of taxable supply as per section 15. Yes, if you want to know the meaning of every word or every sentence, you have to go through with sections which are given by GST authority. So every word or every sentence have its own definition under GST authority. So as per section 15, they are going to explain or they are going to give the meaning for the word value of taxable supply. So as per this section, value of taxable supply is transaction value, which is the price actually paid or payable for the supply of goods or services, and the price is the sole consideration. Yes, so in an easy way, if you want to understand the sentence value of taxable supply, in an easy way we can say taxable supply is transaction value. Yes, the transaction value is called taxable supply. So then what is transaction value? Transaction value, the amount paid or payable for the supply of goods or services. If you are receiving any services, if you are receiving any goods from the supplier, then you are going to pay some value for that person. Whatever the amount you are going to pay to the person, that value is called transaction value. So transaction value, which is the price actually paid or payable for the supply of goods or services, and the price is the sole consideration. Yes, here we will be considering only the price. If the person, if the recipient and the supplier, if they agree to exchange the goods for some, the monetary value and with some exchange, no, only the price will be the main consideration. It is the sole consideration under value of taxable supply. And also where the supplier and the recipient are not related or unrelated parties. Yes, here in this definition, the supplier and the recipient are not going to be the related parties, they are unrelated parties. So value of taxable supply is transaction value, which is the price actually paid or payable for the supply of goods or services, and the price is the sole consideration. And also the supplier and the recipient are going to be the unrelated parties. So this is the meaning of the word supply under section 15 of CGST Act. Moving on to the next slide, here you are going to learn about inclusion in the value of supply. So what and all items we are supposed to include. What and all items we are supposed to include. And you are also going to learn about exclusion in the value of supply. So if we look into the first thing, that is inclusion in the value of supply, we are going to include the taxes, duties, cess, fees, and charges. Yes, suppose you're going to purchase a camera. Okay, the camera, it costs around 10,000 rupees. Okay, it will be costing more than 10,000. For example, I'm saying camera will cost 10,000. So along with that price, you'll be paying for installation, like say 1,000 rupees. Installation charges, and you will be paying CGST or SGST, like say you are paying 1,000 rupees of CGST and SGST, and you're also going to pay some packing charges. So you packed with safe material, so for that you are paying 1,000. So the value of camera is 10,000 rupees. Along with that, we are incurring different types of expenditures. So value of camera plus include the expenditures incurred relating to the main supply, that is camera. So whatever the total we are going to get, like say the total is 13,000. So this 13,000 is called the value of taxable supply, and we will be imposing tax on this 13,000 rupees. So taxes, duties, cess, fees and charges. So we are going to include all types of duties, taxes, cess, but except GST. If any GST is paid on the main supply, if any GST is paid on the main supply, that we are not supposed to include to compute the value of taxable supply. So except GST, if any other tax is paid, say for example excise duty or customs duty, compensation cess, if any this kind of taxes is paid, that we can include to compute the value of supply, but except GST. Next one, amount incurred by recipient on behalf of supplier. Yes, supplier is going to supply the goods or the services to the recipient, but on behalf of supplier, the recipient is going to pay the amount, or is going to pay the amount for some expenditures, say packing charges. On behalf of the supplier, the recipient is going to pay, or sometimes design and development charges. Instead of supplier, the recipient is paying the design and development charges. So at that point of time, we are supposed to add those kind of expenditures. So if recipient is paying any expenditure relating to the supply on behalf of the supplier, then that amount also should be included. Next, incidental expenses and amount charged for activities done before delivery. Yes, if any incidental expenditures occurs, that incidental expenditures should also be considered as part of supply. For example, packing charges, transportation charges, that is freight charges, and any other charges with relating to the supply of this main product. Next, delayed payment charges. If the recipient is making delay to make the payment, for that if the supplier charges any penalty or interest, then that amount should also be included to compute the value of supply. Next, subsidies. Yes, if any subsidies received by the recipient, except the subsidies given by state and central government. If the subsidy is given by state and central government, then that is not supposed to be added, that is not supposed to be included. In case if the subsidy is received from any private organizations, that should be added to the value of supply. So with respect to subsidy, any subsidy received except the subsidy received from state government and central government. So these are all the additional expenditures what we are going to add to the value of supply. If it comes to exclusions, so exclusion in the value of supply. So only one item we are going to exclude from value of supply. So what is that one item? That is discount given on or before supply. So if any discount is given by the supplier to the recipient, that discount is deductible and excludable from the value of supply. Say here the value is 10,000. I was explaining the example of a camera. So value was 10,000 and he incurred other expenditure worth rupees 3,000. Total comes to 13,000. But what the supplier did? Supplier given 20% discount on camera. So the camera value was 10,000 and they had given 20% discount. So 20% discount comes to 2,000 rupees. Right? If you deduct, right? If we deduct 2,000 rupees from 10,000, then the value comes to 8,000 rupees. So 8,000 plus 1,000 plus 1,000 plus 1,000. So now the value comes to 11,000 rupees. So if any discount given by the supplier on or before the sales, that should be excluded from the value of supply. So these are all the items which we are going to add and deduct while we are computing the value of supply under GST Act 2017. So moving on to rule number 27, value of taxable supply where the consideration is not only in money. Yes, if the transaction is happening between the two parties, if the price is the sole consideration, then need not to worry. The value of the product and the additional expenditure incurred, if any discount is given, deduct the discount, whatever the balance we will get, that is called value of taxable supply. In case, in some situations, the transaction will not done only in money. Okay, at that point of time, rule number 27 is applicable. So what rule number 27 says? What are the conditions we have under rule number 27? So where the consideration is not only in money, then the value of supply is open market value. So in the previous slide, I was giving the example of camera which worth rupees 10,000. See, if I am paying whole 10,000 rupees to purchase camera and if I am an unrelated party to the seller or to the supplier, so need not to worry and we need not to worry about these conditions. We need not to look into rule number 27, 28, 29, 30 and 31. Directly we can compute the value by including and excluding some items. In case, if the transaction is not happening only in money, let us say the camera value is 10,000 rupees. What the recipient will do, he exchange his old camera and he pays 5,000 to purchase new camera. Okay, he exchanged his old camera and he paid 5,000 rupees of cash and he purchased a new camera. Actual value of camera is 10,000. But what is the cash paid by the recipient? It is 5,000 rupees. And what about remaining 5,000? For remaining 5,000, he exchanged his old camera, right? But here we should calculate the tax, the GST on the total value or the total price of the product. But here it is not possible to determine the total value or the price of the product. So that is why we are supposed to follow rule number 27. So what rule number 27 says? In case if the consideration is not only in money, then the open market value is considered as the value of supply. So now what is the open market value? 10,000 rupees. So 10,000 rupees will be considered as the value of supply. Next, moving on to the second condition. If the open market value was not available, if the open market value was not available, then the sum total of consideration in money and any further amount in money as is equivalent to the consideration not in money. That means the camera worth rupees 10,000 and I am paying 5,000 rupees and I am exchanging with old camera. So whatever the old camera I exchanged with the supplier, so we should calculate the value of that old camera, right? If you are able to calculate the value of old camera, let us say the value of old camera is 3,000. Okay, and I paid cash of rupees 5,000. So 5,000 plus 3,000, this value is going to be the taxable value of supply. So in first condition, if the open market value is available, say the camera value is 10,000, that is the open market value. So 10,000 will be the value of taxable supply. Open market value is not available, but I am exchanging with old camera and I am paying 5,000 rupees. So 5,000 rupees plus the value of old camera, that is rupees 3,000. So 5 plus 3, it is 8,000. So 8,000 is going to be the value of taxable supply. Next, third conditions. So in third condition, if the value of supply is not determinable as per above points, then the value of supply of goods and services of like-kinded and quality. Yes. So if the open market value is not available, and if it is not possible to determine the value as per the condition 2, then the price or the value of like-kind and quality product is the taxable value of supply. It's nothing but if the open market value is not available, then if it is not possible to calculate the taxable value under condition 2, then we look into the same quality and kind with different brand. Okay, so we are planning to purchase, or we purchased Sony camera, but it is not possible to determine the open market value and it is not possible to find out the sum total. So what I will do, I will look into the other brand camera which have the same features. Okay, so for example Canon. So I purchased Sony camera but not possible to determine. But in Canon also there is the same camera which have the same features. So I will look into the value of that camera. So that camera costs rupees, say 12,000 rupees. So now I will consider this 12,000 as the value of Sony camera. And I will be considering this 12,000 as the value of taxable supply. So this is what Rule 27 says. Rule 27 says. So if the transaction is not happening only in money, then we are supposed to consider the open market value as the value of supply. In case open market value is not available, then sum total of consideration in money and any further amount in money as is equivalent to the consideration not in money. Again, if the value of supply is not determinable as per the above points, then the value of supply of goods or services of like kind and quality will be the value of supply under rule number 27. So moving on to the next rule, that is rule number 28. So when rule number 28 is applicable? So value of taxable supply where supply between distinct or related parties. Yes. If the supply is happening between related parties, for them the treatment will be different. Right. So how we are going to compute the value? Yes. The first thing we will be considering the open market value of the product. Say again, we'll take the example of same example, that is camera worth rupees 10,000. Worth rupees 10,000. So open market value of camera is 10,000. Then 10,000 will be the value of taxable supply. Next, if the open market value is not available, then the value of supply of goods or services of like kind and quality. Yes, if the open market value of a camera is not available, then what I will do? I look into the same kind and quality product in other brand. So whatever the value of that particular product, that value will be the value of taxable supply. Next, if the value of supply is not determinable as per above points, then the value of supply of goods or services will be calculated as per rule 30 or 31. Yes, if it is not possible to calculate the taxable value of supply by using condition 1 and condition 2, then what we will do? We look into rule number 30 and rule number 31. Okay, later on we will be studying rule number 30 and 31. Okay. So we are going to look into rule number 30 and rule number 31. So this rule is applicable to whom? Rule number 28. If the transaction is happening between two related parties. If the transaction is happening between two related parties, then rule number 28 is applicable. Next, rule number 29. In rule number 29, again we have three sets of conditions. So when rule number 29 is applicable, so value of taxable supply where supply made through an agent. In that scenario, rule number 29 is applicable. So if the supply where supply made through an agent, when the supply is made through an agent, then rule number 29 is applicable. So how to compute the value of taxable supply? open market value of goods. Open market value of goods will be the value of supply. In case the open market value is not available, then supplier has an option to take 90% of the price charged for the supply of goods of like kind and quality by the recipient from his unrelated customer as value of goods. Yes, in case if the open market value is not available, if the open market value of the product is not available, then the supplier has the option to take 90% of the price charge for the supply of goods of like kind and quality. Yes, if it is not possible to determine as per the first condition, then what supplier will do? Supplier will be considering 90% value of like kind and quality product. 90% value of like kind and quality of product as the value of taxable supply. Next, third condition. If the value of supply is not determinable, if the value of supply is not determinable as per above points, then the value of supply of goods or services will be calculated as per rules 30 and rule 31. Yes, we will be studying in the later on stage about rule number 30 and 31. Here in rule number 29, if the transaction is happening through an agent, then the open market value will be the the value of taxable supply. In case open market value is not available, 90% of price charged for the supply of goods of like kind and quality. If these two options are not available, then we look into rule number 30 and rule number 31. So, value of supply as per rule 30. Yes, in rule number 28 also we find rule number 30 and 31. Rule number 29 also we find rule number 30 and 31. So, what is this rule number 30 then? So, rule number 30 says, where value of taxable supply is not determinable, where the value of taxable supply is not determinable as per rule 27, 28 and 29, then it will be calculated as per rule number 30. Yes, if it is not possible to determine the value of supply as per rule 27, 28 and 29, then rule number 30 is applicable. Under rule number 30, we are going to calculate the value of taxable supply. So, as per this rule, the value shall be 110% of, as per rule number 30, the value shall be 110% of the cost of production. Yes, if the cost of production is 100 rupees, let us say to produce a pen, manufacturer incurred 100 rupees of expenditure. So, 110% of that. So, 100 rupees into 10%, you will get 10 rupees. So, 100 plus 10, 110. So, 110 rupees will be the value of taxable supply. That is the value of this particular pen. Next, cost of acquisition. Yes, what I will do? I am going to purchase a product from a manufacturer. I am a wholesaler. I am purchasing a product from the manufacturer. I purchased the product by paying 1000 rupees from the manufacturer. So, my acquisition value is how much? 1000. So, 110% of the cost of acquisition. The amount comes to 1100. Amount comes to 1100. So, next, in case if it is not possible to get to know about cost of production, if it is not possible to know the cost of acquisition, then the third thing is cost of provision of such services. Yes, if it comes to services, if it comes to goods, we will be considering the cost of production or the cost of acquisition. If it comes to services, the cost of provision of such services. So, whatever the amount charged by the supplier, then that value will be the value of taxable supply. So, these are all the three conditions what we are going to follow under rule number 30 when it is not possible to determine the value of taxable supply as per rule number 27, 28 and 29. So, next moving on to rule number 31. very special rule, and only in special circumstances rule number 31 is applicable. So value of supply as per rule 31. So where the value of supply of goods or services or both cannot be determinable as per rule number 27 to rule number 30, then the same shall be determinable as per reasonable means with the principles and general provisions of the sections 15 and the provisions of the chapters. Yes, if it is not possible to determine the value of supply by using rule number 27, 28, 29 and 30, then we look into rule number 31. What rule number 31 says? If it is not possible to determine the value of a particular supply from rule number 27 to rule number 30, then we are going to use the general provisions of the section 15. So what and all the general provisions we have under section 15? So using those general provisions, we are going to compute the value of taxable supply. This is what rule number 31 says. So in today's class, totally we discussed about the value of supply and inclusions and exclusions for value of supply. And we also discussed about rule number 27, rule number 28, rule number 29, rule number 30 and also rule number 31. So thank you all for watching this video. We'll meet in the upcoming classes. Thank you.